It's Anthony Meisner at Land Title. Can be bringing your big Boulder County market update for the month. And so let's kind of dive right into it. I've broken this into detached and attached separately, as I've talked for multiple months now, how much that market is really divulging between the two, right? They're changing. They're not changing in the same ways. The detached single family home market, it looks pretty stable, right? Active units are up about 17%, but the under contracts are up 15% with those interest rates starting to dip a little bit. Sold numbers look really good as well, since that's happened for about a month now. So those signs are good. Year to date, you can see that solds are up 14%, the under contracts are up 10. Now, what if we look at the attached market? This is where it becomes really interesting. 58% increase in active units on the marketplace. The city of Boulder is responsible for a lot of that number, right? But the other thing is the average sold price. If you look year to date, if you look at it not year to date, it's down 13% year over year. If we look at year to date numbers, under contracts are down by 7%, solds are down by 5%. More inventory, less sales means prices are going to start dipping down. So that's the bad news in the marketplace. But let's really look at both sides, right? Really strong detached market, really healthy detached market. You can see it here. Most of that inventory has been kind of creeping up over the course of time. Places like Louisville, because of the Marshall fires, and Superior, because of the Marshall fires, have a lot more inventory on the market than they did a year ago or over the last year. Niwot, very similar to this time, much more luxury. So that's kind of interesting to see. If you look at the attached market, though, that 58%, largely due to places like the city of Boulder. Erie's definitely had a little bit more, but take it with a grain of salt. There's not a ton there. And Louisville, for some reason, has attached inventory. So we're seeing that for the first time in a long time. It's not something we normally see. Month supply of inventory across detached, 3.5 months. Lafayette at 2 months, Niwot at 2 months. So certain markets really low. Superior's at 5 and Boulder's at 4.5. Those numbers definitely feel a lot more like what would feel like a buyer's market. So if you're looking for deals, look into Superior, the city of Boulder. Probably not getting deals, but you're definitely seeing some stability there, some more balance. Now, if you're looking at the attached market, this is where things are really hard. The attached market in Louisville and in Boulder have a lot of inventory. Longmont at 4 months, it probably feels really balanced, even though that's not what we're used to. But with that much inventory on the market, you're really seeing buyers favored in these negotiations right now. When you look at it by days in MLS, though, the stuff that is coming on, priced well, prepared well, is going under contract pretty fast. 48 days in MLS for detached across all markets, but Superior's at 83. So there are outliers here, right? And if you look at a place like, Niwot, Erie, out in the county, Louisville, 50 days is pretty normal. Fastest paced market is Longmont at 38. So things are still clipping along pretty well there. The attached side of things, kind of the opposite in many cases, right? We have 50 days in MLS, but a lot has come off the market and gotten rented. You can definitely see that it's bounced around a lot this year, but those numbers have been ticking up because there's so much inventory. All right, let's talk by price point. The luxury portion of the market is pretty similar with this time last year. You can see that it's slowed a little bit at the super high end, but honestly, it's all kind of just hanging in there in the luxury market. Slow and steady, kind of, right? Now, if we look at the under 2 million market, so let's call it 800,000, or let's even just call it the 1.5 to 2 million market, there are more sales taking place. Now, people are getting a little bit more realistic on price, which is getting some stuff sold. The bulk of that market, though, anything under 1.5 million, we're really seeing an increase in sales, right? We're seeing a good number of sales take place at $400,000, $500,000, $600,000 market, even more so. Lots of people are being forced down in the purchase price because of the cost of money still. So you're seeing people come off the sidelines. The attached market is where you're seeing across the board slowdowns. Luxury definitely slowing down some, maybe a little bit more, but that's 600 to a million range. That's the toughest part of the attached market, right? The lower portion of the attached market, people are being forced there by necessity, but these sales numbers are low. I mean, when we're talking 500 to 600,000, we only see 18 sales in a month. These are tough markets they're tough to look at, right? But that's just par for the course right now. And as money starts to get cheaper, it could change. Okay, so look at this. Detached single-family home, one supply of inventory. If you're really under 800,000, could easily still be in one of those veins where it's pretty well balanced or even seller favored. And then you get over that and we start to see those 3-4 months of inventory where it feels a little more balanced. The 2 million and up market, still a buyer's market, and it's still continuing to have a lot of inventory up there. Even with some sales, things are taking a little bit longer to sell. If you look at the attached market, everything is 4 months of inventory or more. So balanced at best at the lower end of the market, and really, really buyer favored as we get into the higher price points over about 600,000. Okay, average sales price. This is one that everybody keeps looking at because we've got a little bit of negative numbers in here, and I think it requires a little bit of explanation. So the Boulder City market, you can see it down at the bottom there, minus 1.68% over the last 12 months, kind of percentage change, right? So comparing this 12 months to the previous 12 months, you've seen prices just stabilize just a little bit. Louisville, Lafayette, Superior, Longmont, all looking good, positive numbers. Things are appreciating just a little bit. The Erie market, same as Boulder, just kind of stabilized a little bit because we've had a lot of inventory, even though we have people buying and selling, right? Take Niwot with a grain of salt. Lots more luxury has sold recently than anything else, so kind of ignore that picture for now. If we look at the attached markets, this is where you've seen a little depreciation, right? And I say a little because we're talking 3.5% trailing 12 months, year over year. We show a big number, but we've had some bouncing around. So we had a really weird off month in October last time. Here we are again. We're seeing some of those prices come down just a hair. Only 2.5% in the city of Boulder. Places like Superior, that's where some of it's really tough to swallow. 8.8% over the last 12 months. New builds are coming online cheaper or as affordable as resale, and they're really taking a toll in the resale market because of that. Okay, check this out. Sold units, detached single family. We had a really awesome month in October, right? Bigger than usual. This really says that we should have a much more plateauing fourth quarter. We have more buyer behavior. Interest rates have started to come down. The election's over. All that stuff that favors the market. Detached is looking great. 14% increase year to date in sales. The attached market, not the case. We had a pretty plateaued last fourth quarter last time. You can see that seasonality is not nearly as important in the attached market, but you're definitely going to see a little bit of a slowdown here. Now we've seen 5% year to date. I don't think we're going to quite hit those numbers for November and December. It's just been a tough stride because of insurance issues, HOA issues, deferred maintenance in the city of Boulder, lots of inventory on the market. So you can kind of see that happening. Motivated sellers will still get it done. There are definitely still buyers out there, right? We did 89 sales last month. So if you have homes sitting on the market in the attached price point to that. There are sales getting done. They are taking discounts. We can see price changes happening. The percentage sold to list price, you can see pretty similar to this time last year, but trending down just a little bit. The bread and butter of the market is still getting a pretty reasonable price, that 98, 99% range. But you are definitely not considering price drops or concessions. So as we kind of get into the fourth quarter, as things are always a little bit tougher, expect those type of things to happen. In the attached market, you're seeing very similar behavior. If you're priced right, you're going to go under contract in a reasonable amount of time. You're getting reasonable offers, but just understand that that doesn't take into account concessions, which can be very important. All right. If you have any other questions, any other concerns, please reach out to me. I'm Anthony Meisner at Land Title. Hope to catch you next time.